Hello everyone, and welcome to this week's CLiK Trading Education Weekly Market Summary. I'm Iftikhar, co-founder of CLiK Trading Education. Over the next few minutes, we'll review the biggest market moves, what drove price action this week, and the key events traders should be watching next week. As always, our goal isn't to predict the markets, it's to understand them so we can make better trading decisions. Let's get started. It was another positive week for risk assets. Technology stocks led the gains, while traditional safe havens such as precious metals weakened. The VIX also moved lower, suggesting investors became more comfortable taking on risk. This week saw the Nasdaq rise around 1.6%, the S&P 500 gain 1.3%, crude oil climb almost 4%, Bitcoin remained resilient, silver fall sharply, and the US dollar softened slightly. Markets rarely move together. Money constantly rotates between sectors and asset classes, and understanding those flows provides valuable insight into overall market sentiment. The key market moves. Technology remained the standout performer. Meta jumped more than 12% after stronger earnings and positive AI guidance, while Nvidia gained over 8% as demand for AI infrastructure continued to grow. Oil also rallied on ongoing geopolitical concerns surrounding global supply. In crypto, Bitcoin held firm while Solana underperformed, reminding traders that digital assets don't always move together. What drove markets? Three themes dominated. First, stronger than expected US non-farm payroll supported equity markets, although persistent inflation continues to create uncertainty around future interest rate cuts. Second, central banks remained in focus. The Federal Reserve stayed cautious, the ECB remained relatively dovish, and the Bank of England continued signalling inflation risks. Finally, geopolitical tension supported energy prices, while uncertainty surrounding US-China trade kept investors cautious. Remember, markets react to expectations more than headlines. It's often the difference between forecast and reality that creates the biggest technical picture. Technically, several markets remain constructive. The Nasdaq continues to trend higher, although after such a strong rally, traders should watch for signs of slowing momentum. The S&P 500 is approaching resistance, while gold and silver remain under pressure as investors favour growth assets. Oil remains bullish, but is nearing an important resistance area. In currencies, the US dollar softened, euro remains range-bound, sterling showed relative strength, and CAD continues responding to higher oil prices. Rather than chasing price, we'll continue waiting for quality supply and demand levels that align with our trading plan. Next week brings several important economic releases. US retail sales start the week, followed by Eurozone inflation and Chinese industrial production. Wednesday's FOMC minutes will be the key event, with traders looking for clues on future Federal Reserve policy. The week ends with UK GDP, US jobless claims, the Bank of Japan decision, and China's trade balance. Rather than trying to trade every announcement, we'll focus on how markets react once the news is released. Trader takeaways. This week reinforced several important themes. Technology continues to lead. Oil remains sensitive to geopolitics. Central bank policy continues driving currencies. Sector rotation is creating opportunities, and low volatility should never be mistaken for low risk. Successful trading isn't about predicting the future. It's about following a repeatable process, managing risk consistently, and waiting patiently for high-quality opportunities. Thank you for watching this week's CLiK Trading Education Market Summary. If you enjoyed this update, please like the video, subscribe to the channel, and share it with another trader. To learn more about our live mentoring, structured trading courses, and supply and demand methodology, visit cliktradingeducation.com. Until next time, trade safely, manage your risk, and remember, the goal isn't to predict the market, it's to prepare for it. Thanks for watching, and I'll see you next week. And please remember, this content is for educational purposes only and should not be considered financial advice. Trading financial markets involves significant risk, and past performance is not indicative of future results.